Hello, everybody. This is Samera here, and I've got Dan with me tonight. How's everybody doing?
Yeah, good, thank you.
Just give me 1 second, guys. There's a new piece of technology we're working with today to run this whole webinar with you guys. So that's all right. Okay. So yeah, welcome. So on a wet Wednesday evening, it was sunny for a day. Now it's all turned a bit pear-shaped. But I'm Aaron, and I'm based in wet Guildford. Dan, where are you today?
I'm in Essex today, and yeah, it's been sunny here today. The rain hasn't come yet, but I'm sure it will.
All right, fair enough, fair enough. So today, this topic is titled, "Are interest rates actually going to come down?" Okay, so myself and Dan will have a bit of a debate, have a bit of a conversation around this, and I'm sure if you've got questions, please don't hesitate to ask. But we'll crack on. So let me just get these slides showing. Hopefully you can see those. Yeah. Is that your dog or my dog barking in the background?
I think it's my dog. She started barking, so I apologise.
That's all right. So, Dan, just tell us about a little bit about yourself, firstly. Okay. So we have a bit of a people have.
So in terms of myself, I worked for RBS for 20 years. I worked in the healthcare department for the last 10 years. I've now been at Samera for 5 years, which has gone quite quickly. Actually, it's sort of flown by. So
you don't look. You still look so young, though. You said 20 years.
I know. It's all the beauty products.
Just been like 2 when you started at NatWest.
I started when I was 10 and just sort of worked my way through, really. But so obviously at the bank, I used to specialise in healthcare, so doctors, dentists, pharmacists. So it was actually quite a nice fit when the role came up at Samera. Because obviously we do the same thing, so specialising in raising finance for the healthcare sector.
Okay, cool, and thank you, Dan. And for anyone who doesn't know me, I'm Aaron. I'm been around in the dental business and accounting business and Samera for almost 25 years. Started it back in 2002. There's not much I haven't seen as an accountant, as a finance person, as an advisor. So but these times that we're seeing today, interest rates staying high, were low, now high. Not good, is it? So, right, let's have a look at a graph. I'm an accountant, so I thought we'd look at a graph. That's probably a good starting point. So this is actually taken from the Bank of England website. And how many years? Must be about 12 years, is it? 12 years. We had such a great time, didn't we? Rates were like so low. Okay. Do you remember pre-2008, Dan, or not?
Yes, I remember before the crash because I was working at the bank when that all happened. So
what was it like at that point then? There.
Well, beforehand, the bank was doing very well, but then after the crash, there were a few difficulties, I would say, after that. But I suppose what that graph shows is historically, obviously, you go before the big dip down, is base rates have been historically a lot higher than what we've experienced in the last few years. Really, it's sort of unheard of, the low base rates that we've been having, and I think unfortunately we got used to them. We got used to those low rates and borrowing money on those low rates. So I think the impact of the rates going up has sort of really had an impact on people's borrowing and how they look at the finance at the moment.
Yeah, no, absolutely. So no, it's not just on a commercial basis, but people with mortgages, people with buy-to-lets, all these types of things. So if we look at if we just look at people's personal circumstances first, I was just looking the other day for myself. My mortgage rates came to an end yesterday, actually, and I kind of balked at the figures, thinking, oh my goodness, it's just gone up significantly. We've seen buy-to-let market plummet in many ways, so people selling off properties very quickly over the last year or so because they can't make them work. So that's on the personal side, but tonight we're going to be talking a little bit more about the kind of commercial side and the dental business and healthcare business sectors. But what we can see here is this U shape, but this is just showing back until like 2002, 2003. But I think for some people who do remember, perhaps me in the 80s, albeit a wee nipper I was, you had rates up to 15, 16%. So what we've got now is still quite low in the grand scheme of things. Obviously, it feels its pinch, especially if you've got a big borrowing. You feel it, but that's the world we live in. So what we're going to talk about tonight is, go on, Dan, you take it away. What we can discuss it. You take it away on this subject here.
Yeah, so I think obviously I suppose to be clear, we're not economists.
We're not economists. And thankfully, I'm not an economist, and usually economists get it always wrong anyway. So that's
exactly it's speculation. But obviously, on all the information that we've sort of we gather as part of our roles is at the last year or the start of this year, I think they were quite buoyant in terms of what they thought was going to start happening with base rate. And they thought that there will be some movements within the year and start going down. But I think with the inflation pressures not going down as quickly as they thought, what they're saying now is that the base rate changes possibly won't be coming into now maybe September time. So they're really pushing them back, where they was hoping to have a few at the start of the year, and obviously base rate would start possibly going down to that 4% mark, which everyone was hoping. But now that's pushed back. I suppose the positive on that slide is inflation was up to 11% in 2020, so 2022. So obviously it is moving in the right direction. But I think what the government, obviously their target being 2%, is the Bank of England don't want to drop it. If it does get to that 2% mark and it does rebound afterwards, they don't want to start dropping base rate and then having to push it up again. They're trying to do it gradually so that people start getting used to it bit by bit. And obviously inflation's one element, but obviously you've got to factor in other points like, the labour market is not as strong as it was. There's unemployment is starting to rise. And then also people in employment, because the cost of living has gone up. And like you were saying about your own personal mortgage, looking at that, people are pushing for higher pay rises. So pay rises are going up, which again has an impact on the market. So I think, from what we're reading at the moment on base rate, is that they feel it's going to stay there till possibly September, stay at that rate, and then have some slight drops, but not significant enough to make a huge difference, really.
Yeah, my gut's telling me it's going to be longer than September, I think, to be honest with you. I think
that's what I read.
Yeah, I don't actually read, but as a negative Nelly over here.
Yeah.
I just think we've got kind of a general election probably happening at some point quite soon. That will take people's focus off this to some extent. I think summer is coming. People will spend, go out, even if they're feeling the pinch about it, they'll go out. That'll have an impact on inflation, I think.
Yeah.
So yeah, let's see. I think I personally think that it's a funny situation at this stage, but let's move on. Okay. So it's kind of a little bit you've talked about already, Dan, but do you want to just cover these as well?
Yeah, so possibly I say September there could be some cuts, but then 2025, then they think to more small movements in terms of base rate by then. But I think you're noticing in terms of the personal mortgage and also on the business side on the mortgages, you're noticing now the fixed rates are starting to creep up a little bit. So what that means is when the lenders are looking at their what they think base rate's going to be doing long term, they feel it's going to stay a bit higher longer, because there was one point the fixed rates were starting to come down. But I think where they're starting to push them up, you would think that the bank's economists are looking at this and thinking maybe base rate's not going to start moving. And like your point, really, there is the general election looming. So we don't want to get political on here, but depending on who gets in, that could have an impact on what happens with the economy going forward, really.
Yeah. So it's going to be an interesting one, I think. We won't get political here. It'd be very dangerous.
It'll be all day.
Even though I'm tempted to, but I won't. So then, in terms of the impact on the healthcare or the dental market, what's going on there, Dan?
Yeah, so in terms of the impact, obviously, what you're having, higher base rate charges means there's higher, borrowing costs for clients. So I don't think we're seeing a drop in practice valuations at the moment, but they are certainly holding. And I think what you've got in that is, one, I suppose, are they selling? And then the buyers coming into the market, are they sort of waiting and then seeing to see what happens with base rates? So instead of sort of taking that plunge and diving into the sector and buying a practice, are they seeing maybe I can wait, base rate may go down and my cost of borrowing may be cheaper going forward? So I think you've got that. So you've got things coming to market and maybe not as many buyers. And then, which we certainly see, a certain trend in terms of setting up squat practices, because the point of entry is a lot lower for a squat practice. You could set a squat practice up for possibly 250 to maybe 300,000, depending on your spec and what needs to be done in the property. So I think we're certainly seeing a trend in terms of people pivoting to startups, really, in terms of not purchasing an established practice. The only thing I would sort of caveat with the startup side of things is, yes, it is a lower entry point, but there's a lot of work involved in doing it. And I think you need the right advice if you are going to go down that startup route, because, we've had situations in the past where people want to do a startup and they've ended up spending, trying to spend 600,000-700,000 on it. You might as well buy an established practice. So we're quite cautious when we speak to people about startups and how much they should spend on them. So if that is a route they're looking to go down, I think they need the right advice. And, if they need us to sort of chat that through with them, then we're more than happy.
Yeah, no, valid points here. I think if I could give my kind of tuppence worth here, I think practice values are holding, but that's only because of the brokers trying to tell the sellers to wait and keep them higher. And we've seen a correction in interest rates. I think if someone's desperate to sell, that value will have to come down. You can't just keep waiting. There's a disconnect there. So I personally think the values are perhaps too high to some extent, but for certain clinics in certain areas. Again, obviously, if you've got a great clinic in a great area and it's doing great, then obviously people will buy it anyway. Okay, an individual or a corporate. But you rightly pointed out here, corporates are also have slowed down significantly in terms of the acquisitions. Well, I know one or two are kind of mooting around, so we're looking to buy now, we're doing this type of stuff. But I think the reality is it's actually a lot lower than they try to present, because they're struggling with integration of their other practices, they're struggling with resourcing of people.
But their costs are going up as well, aren't they? So
yeah, of course they are. Of course, well, their cost of borrowing is going up. So remember, a lot of these groups are very highly leveraged. Okay, so they're borrowing a lot of money already, and a small increase in their interest rate has a significant impact on their business model. Okay, so especially these buy and build corporate private equity backed things. And remember, the private equity might be private equity, but they also borrow a hell of a lot of money from banks and lenders. So that's why they've slowed down, because if interest rates are now at 5.25 as a base rate, as opposed to what it was a year and a half ago, no wonder they're kind of worrying, okay, to some extent. But I'm not trying to make it negative. What I'm trying to highlight is that it's just a different market. Okay, so for a buyer, it could be some good deals out there if they're willing to negotiate and kind of identify a good practice. I only just spoke to another dentist earlier today who's an existing client of ours who owns a practice, who did a startup a few years back, but now he wants to purchase one. And he thinks, like me, that it could be a good time to purchase. He's done very well in his squat, so he's going to use the cash to acquire another practice in the right location. So there are deals to be had, but you have to be very focused. You have to be very kind of know what you want and be quite ruthless in that process as well. I think.
Yeah, I think also, and I think you've helped quite a number of clients when they're looking to buy a practice, is the due diligence and actually looking at the figures, and because what the purchase price is doesn't necessarily mean that's what you need to pay for the practice. I think that's the point to get across as well, isn't it?
Yeah, I think you're right, Dan. It's quite interesting. In a few years ago, people who didn't used to do, well, they used to do due diligence, but it was difficult to negotiate prices down. Now we're in a market where, well, let's say someone's marketing in practice for £700,000 as a rule of thumb, and it's been marketed. The way we would work with a client is to say, well, if they want to buy it, let's do an initial valuation of it. Well, let's have a look at it, look at the numbers. So we'll do some calculations and work it out. And we might say it's actually not worth 700. We think it's worth 600, for argument's sake. Then the buyer would go to the vendor and say, well, hold on a minute. Our guys at Samera are saying it's worth 600. You negotiate and eventually settle at, let's say, 625 as a number. Okay, let's agree to buy and sell. All good. Instruct lawyers, etc. But then you instruct us again to do the financial due diligence, and that's when we really get to see the numbers, to understand the business. Is it actually performing? And quite often or not, accounts for these businesses maybe like 6 to 12 months out of date. And what we really want to see is up-to-date management information up to the last month, because then we can start seeing the trend. And that's kind of the last 12-month information. And quite often or not, we can see that the practice it's taking its foot off the pedal and it's declining. So then our argument back to the purchaser is to say, well, it's not actually worth 625. We think it's worth 550 or something. Okay. So, and then there's another argument to be had with the vendor over that, and you may come to a conclusion to agree at a price that is even lower. Okay, so than the 625. So maybe at 575, 600 eventually. So what I'm seeing is that if you're going to buy a practice, you have to understand the numbers. You need to make sure you've got professional advice, as Dan said, but also don't be afraid to negotiate, and don't be afraid to kind of think, well, this isn't worth it. It's not worth this price. And look at it. How does it impact you as an individual? Don't be. And I think what the point here is also, don't be scared to offer a low offer. Your low offer may be the only offer that they've received. Okay, so the world has changed in the space of 2 years. It's changed significantly. So I think it presents an opportunity for those who are quite opportunistic out there. Right, moving on. So I've kind of talked about this. So, but as a practice owner, Dan, what can people do? Okay, if their practice is it was doing all right, but it's still doing okay, but all their costs have risen, borrowing costs have risen. What are the things that they could do?
Yeah, I suppose looking at your costs really, because you'll have some costs in there where obviously your loan payments, that's one cost you're going to have in there. Your staff costs, which may be a bit hard to sort of deal with at this moment in time, but you've got the other costs like utilities, consumables, and how you're purchasing equipment really. So on utilities, when was the last time you had them reviewed? You're paying them, it's something that you need, but just because obviously you've got one supplier at the moment doesn't mean that someone else couldn't review them and you could get them cheaper. Consumables, again, something else you have to pay for, but are there other suppliers out there that could possibly be cheaper than what you're paying at the moment? Patient plans. I know that this isn't something that a lot of practices are looking at the moment. And what patient plans are they on? Are you on the right patient plan, or are you on one that you've just historically had and it's costing you more? Is there more competitive deals out there? And then the last one, in terms of purchasing equipment, practices will always need to purchase equipment for, to keep up to date with the services. But do you want to tie your cash up to purchase equipment? Do you want to keep your cash in the bank if you need it for something else, need it for a rainy day, or, but if you use something like asset finance, so you could purchase equipment over a period of time. So say like 5 years for a dental chair, you're making regular payments over that 5-year period, but you haven't sort of tied up 20, 30 Ks worth of cash within the business. So there's things that you can look at, and you can spread the cost over a longer period of time. So that will help the business cash flow. So if things are a little bit tighter than before, why not look at your cost base?
No, absolutely. And I think and that's the cost side of things. Okay. But remember, cash flow has two sides. One is the cost, but also the income side of things. Now, what can you do on that side? obviously you can change your prices, okay, which would be inflationary, I guess, to some extent, but you need to make sure you maintain that you're covering all your costs. If your costs have risen, you might need to raise your prices. And I think sometimes people are afraid to do that, but in my view, you just got to do it sometimes, bite the bullet and get on with it. And you might not realize which prices should I be increasing. Well, if in doubt, come and get in touch with us. We can help you do a fee review of everything, of all your services across from small fillings to Invisalign to you name it. We can help you with that. But also then the volume of customers coming through, and that means is your marketing working well, that type of thing. So it's two sides of the coin here, and at the end of the day, you want to be tracking how you're doing on this thing and monitoring closely your performance on the business. So how can we help, Dan? What are the things? What's one thing?
Yeah, so we're talking about the costs. So we created a buying group about 3 years ago now. It's to help dentists sort of get the same sort of benefits as corporates, really, because we've got the buying power on the buying group. We've managed to negotiate certain deals with different companies. And basically, the benefit of the buying group, it's free for you to join. There's sort of no hidden catches for us, there's no hidden fees. You join the buying group and basically you get access to all the partners on the buying group. So the first one, you've got rights. So on that, they can look at your consumables. So if you want to look at, maybe possibly saving up to sort of 20% on your consumable costs, go through rights, you create an account and then you place your orders as normal and you'll get the discount. Utilities. So we've got a company, Beacon Plus, on there. They will review all your facility and your utility costs. They'll look at your electric, but they do all the work for you. You just let them know, what services you have at the moment. They'll go out there, they'll find the best providers, and then they'll bring that back to you. And then you've got the patient plan direct that we work with. So, you may have another plan provider, but are they the cheapest out there? Where patient plan direct, are reasonable in terms of their costs, and obviously they want to win new business, so you may be able to negotiate with them a better rate than what you're on at the moment. So you're saving money, obviously, and your patients are getting what they need, because obviously a lot of patients nowadays want to pay over a period of time. So look at these costs, sign up to the buying group and say it's free to join, and then you can have access to all the different services on there.
Yeah, I think I've just echoed Dan's point. You've got nothing to lose and everything to gain here. No. It's free to join. What we'll do after this call, we will send an email with a link to the buying group for everybody to have a look at and just sign up. And once you've done that, Dan will be in touch and hopefully we can help saving you some money there. Okay.
Yeah, I suppose one of the other points, actually, not about saving money, but on the compliance side of things, that may save you time where your staff can do other stuff. So if you've got the compliance team, putting all the plans in place and all the training in place, that may free someone up to do something else, to actually generate some income for the practice. So working a bit smarter, using the services are there. So that could be beneficial as well.
Sure. Okay. And then I suppose on the flip side, and that's Dan talking on the buying group and the accounting side of things. From my point of view, it's the other side is visibility of the numbers. Okay. As an accountant, it's in my view, and even if things aren't growing great, you need to know how your numbers are. Okay. You got to understand, you got to be having the monthly accounts, bookkeeping done. Then you can see the monthly management figures. And then you can ultimately see, okay, which costs are rising and what do you need to cut? Perhaps which services do you need to change prices for? Okay. And honestly, there should be no excuse not be having this information at your fingertips now. We do this for literally so many clinics across the country now using cloud accounting software like Xero. And we can take care of that, get the bookkeeping done, all the management information done. And then ultimately you can review that information with us to make better decisions. And that's ultimately what you want to do to make better decisions around your business. So in summary, how can we help, Dan?
Yeah, so we can help, obviously, one, with the buying group. Two, so if someone wants to maybe possibly refinance their existing lending, we're happy to look at that for them. Or if they're looking to purchase a practice, again, we can help raise the finance for that. I suppose the importance of using a broker on raising the finance is, obviously, you go to a bank they will just tell you their rates. They won't say, actually, the bank down the road are probably a little bit cheaper than us. So for what we do as a finance broker, we will go out to the market to try and get the best rates available to you. And obviously we'll present them back to you, the different rates, the different terms, you know, the security they need, if any. So we will set that out for you, so you know you're getting the sort of the best terms available. So yeah, any finance sort of questions, just reach out to us, and we're more than happy to help.
Yeah, and something I just want to show everybody in a minute, but you can book a call with Dan, myself, or Nigel, or Natasha, or others in the team on our website. You can email me and Dan on these two kind of email addresses here, aaron@samera.co.uk and dan.fearon@samera.co.uk. And just one other thing I want to share. Hopefully this will work. Let's see. Can you see that? Yeah. Okay. So this is. You can see that, Dan, can't you?
Yeah, it's a bit small, but I can see it.
I'll make it bigger. Hold on. Yeah, you see it? This is one of the things I want to highlight, and this goes back to the point I made earlier, is there are so many dental practices that aren't doing this. Okay, and I must stress you need to be automating your accounting function. So using things like Xero, cloud accounting software, and knowing the numbers. So this is a PDF we've put together. There's a service for startups, there's a service for single practices, a service for groups. And what this does, it just literally shows you everything that we cover in this type of service that we provide dentists from our accounting team. So obviously the bookkeeping, the software, we can track categories, we can help with payment runs. So if you want to have accounts payable and save time, rather than having to pay each individual supplier through your bank account, you can just make one payment and it will pay all the people in one go. Payroll, management accounts, you can do the associate pay, you name it, all these key ratios, but ultimately analyzing and understanding your numbers. And I think if I had to strike a point here, is that I know it's not the sexiest thing, the numbers. I know it's not the most interesting thing, like doing the marketing or the Google ads or say social media side of things, but knowing your numbers is absolutely imperative. And in an environment like we're in now, where we don't know what's going to happen next with the interest rates, we don't know financially where things are heading, having a grip of your numbers is more important now, I think, than I've ever seen it in my career running an accounting firm for dentists. You could get away with it a few years ago, okay? NHS money was coming in, people were doing all right privately. Now it's more competitive. Now it's financial interest rates are higher. Now costs are rising. It's like a triple whammy there. And if you don't know your numbers, you're blind. And that's no good when you're running a business. So it's so important to have this to hand. You can book a call with us. Obviously, we do all the annual compliance stuff, HMRC, kind of tax returns and annual investigations, you name it, P11Ds, you name it, we do it all. So if you need any help on the accounting side, reach out to me. You can book a call. If you need any help from Dan on the finance side, or alternatively Nigel as well, who's not here today, you can reach out to him as well. So any final points, Dan?
I was just going to say, just on that information, is lenders need that. So if you've got a practice and you're thinking about selling, you know, someone buying your practice wants to have that up-to-date information, and they know it's so easy to get now. So they would expect you to have Xero and be able to produce management accounts and stuff like that. So you need it for your day-to-day running, but if you're getting to that point of thinking of selling, you need to have that up-to-date financial information.
Absolutely. A lender won't lend the money.
No. They want to know, you know, they want to know that the business is performing. A bit like you saying earlier, if they're too far out of date, how are they going to know that business is still performing? So they need those up-to-date figures.
Yeah. Well, there you go, everyone. So our interest rates ever coming down? In a nutshell, for the foreseeable 5-6 months, I don't think they are. Dan, what's your view?
I say, well, from what I've been reading, that I'm gonna say September. So I could be wrong. You know, who knows? But September, we'll see what happens.
We'll do this same webinar in September.
Yeah.
Where we are then. Hopefully,
they've probably gone up by then.
Yeah, they probably have. So, with a general election or anything that might have happened in between. So on that note, if you need any help, anybody, you know where we are. We've spoken for 30 minutes today. I hope you have a great remainder of the evening. Thank you, Dan, and thank you everyone out there. Okay.
Take care, everyone. Bye.
Cheers. Bye.